So very good morning everyone. In the last class we started with our very important discussion in income tax, that is the chapter capital gains. And as already promised, capital gains for CA final will be available on my YouTube channel uh, absolutely free, and it will be open for all of you. Because there are amendments in capital gains, there are connecting provisions in capital gains. I personally feel that capital gains will be the central part of the entire nervous system of direct taxes. So therefore, I just wanted to put it open such that any interlink in any revision classes if I give with regard to the final direct taxes, it will be easy for the student to go back to the original video of capital gains relation and get the clarity there itself. And moreover, with regard to the capital gains, we completed what is a capital asset, almost 60-70% completed, maybe 50%. So the balance 50% part of the definition capital asset we are going to discuss now. Capital asset definition, why it is very important in this chapter, the entire crux of capital gains is on transfer of capital asset. So two definitions plays a crucial role. Number one, transfer. Number two, capital asset. So if capital asset is transferred, sections get attracted. So the two things are capital asset and transfer. Before we go into that, I wanted to just give you an example. I transferred a stock in trade, chapter will not get attracted. I have capital asset, but I did not transfer. Capital gains chapter will not get attracted. Means what are the two conditions that should get satisfied? There should be a transfer, there should be a capital asset. Then if both the conditions are satisfied, if the capital asset is transferred, then sections will get attracted. This will look something similar to that of related party transactions in Companies Act. Okay, related party specified transactions, both if they get attracted cumulatively, section 188(1) of Companies Act will get attracted. Related party transactions, same, related party is there, but specific transactions I did not enter. It's not a section 188 transaction. There is a related party, but transaction is not specified, not a related party. There is no related party, but a specific transaction, that is also not a related party. There should be a related party, there should be specified transactions as well. If both the conditions are cumulatively satisfied, then section 188(1) of Companies Act will get attracted, related party transactions. In the same way, there should be a capital asset, there should be a transfer. Transfer of what? Transfer of that capital asset in the previous year. Then section 45(1) will get attracted under the Income Tax Act. So what is the subject summary? First thing people should know, what is a capital asset? Asal what I transferred is an asset or not? Capital asset or not? I wanted to know. First, if you know about that, remaining chapter progress will begin. Are you understanding? In the definition of capital asset, you don't have a clarity. Summary you read some blah blah blah, you read some points and you started capital gains chapter. That is not the way. Okay, dharmam dharmame. Even you read, remember every summary, unless and until you read what is there in the Parliament edition, which is called as a Berat, it is always incomplete of reading a law. Clear? Again I am repeating, dharma dharmame. 1,000 things, 1,000 stones can fall against it, but it is always standing straight. Clear everyone? Law means bare provision. There is no alternative for that. Law means bare provision. Take study material, bare act ke copy paste in paragraph format. Why? Because institute never wanted to defame the Parliament edition. Who passed it? Lawmakers made it. Parliament passed it. How can I tell this is not worth it? Therefore, read the bare act properly and let's continue. Okay? See here. What we read in the last class. Capital asset means, we read, property of any kind, movable, immovable, tangible, intangible, fluctuating or circulating or fixed in nature. It's a property property does not represent only just a physical property. Rights also will get attracted. I have a right on something. I have a right to hold it. That is also an asset. Held by an asset, whether connected with the business or not. Means even if you are carrying on any business or profession, any land and building you purchased for factory building, etc., and you transfer that, still capital gains only will get attracted because you are using it for business. Okay, that is not the stock in trade for you. Okay, if something is a stock in trade, then only it is excluded. Property of any kind means what? Stock in trade also will come. That's why they said, but does not include stock in trade, consumable stores and materials held for purposes of business or profession. Next one, any kind personal effects will not get attracted. What is a personal effect? Some things which will have depreciation in value in general. Okay, so sir, you said Louis Vuitton example. In that case, value will increase. 1 or 2 cases only this will get attracted. But 99 cases out of 100 cases, what is getting attracted? Values will depreciate. Lawmaker wanted to cover that 99, not that 1% which will happen insignificantly. Okay, so personal effects, that is to say, mobile property, including wearing apparel and furniture. Sorry, held for personal use by the assessee or by any member of the family dependent on him, but excludes 6 things. What are the 6? First one, which can appreciate in value though used for personal purposes. Jewelry, archaeological collections, paintings, sculptures, writings, any works of art. Okay, all these things. Jewelry includes ornaments. Okay. Next, what we are reading? We are reading does not include, means what? In this property of any kind, certain things are not included. What are they? What are not included into this is what we are going to discuss now. See here. Listen carefully first. See, observe how I am framing the statement. See how we need to frame the sentences. This is the perfect way of reading the bare provision on agricultural land, whether it is a capital asset or not a capital asset. Okay, let's see. See here, capital asset means property of any kind held by the assessee whether for business or profession or not. Okay, that understood. Property of any kind. In this any kind, it does not include agricultural land in India. One thing clarity, foreign agricultural lands are capital assets only because they are not coming into this, does not include. Okay, what is that? Foreign agricultural land. that agricultural land should be situated in India. Agricultural land in India. So, but does not include agricultural land in India. See, capital asset means property of any kind held by an assessee, whether for the purposes of business or profession. Adi okay. But does not include. What does not include? Capital asset means a property of any kind, but in that any kind, it does not include an agricultural land. But he did not tell that way. But does not include any agricultural land in India. He did not stop. He said, it does not include agricultural land in India. 100% correct. Not being a land means what? That agricultural land should not belong to A or B. If it is A category, it is not a agricultural land which can be excluded. Means what? That agricultural land will be included into capital asset. Any transfer of such kind of agricultural land will be taxable under the head capital gains. Okay. See, again I am repeating. Capital asset, okay, means property of any kind. Any kind. In that any kind, everything will come including agricultural lands. That's why what they say. But in this capital asset definition, in that property of any kind, agricultural lands are not included. Then question, okay, any agricultural land excluded? Then they said, no. All agricultural lands are not excluded again. I will tell what are the agricultural lands that are excluded, they said. Which kind are excluded? Then they said, agricultural lands not being a land situated in area A, area B. What are this area and area B? Urban areas. Enna areas here? Urban areas. Means what? Agricultural land is not a capital asset provided it is not situated in a urban area. Means what you have to understand? Rural agricultural lands are treated as exclusions from the capital asset definition. Means sale of or any transfer of urban agricultural land will be treated as it is like any other property under capital gains. Land, how it is transferred, capital gains attracted, urban agricultural land also will get attracted in the same way. Understood the logic clearly? This is the first point that I wanted to discuss. So the simple summary is, rural agricultural land is not a capital asset, and therefore transfer of rural agricultural land will not attract capital gains tax. On the other hand, urban agricultural land is not excluded from the definition of capital asset, and therefore it is a capital asset, and therefore any transfer of urban agricultural land will be taxable under the head capital gains. On the other hand, if the agricultural land is located in a foreign country, I mean to say other than in India, irrespective of whether it is a rural area or urban area there, it is always treated as a capital asset. Any transfer will make the amount as a capital gain getting taxed in India. So, is a basic analysis. But here the question is what? When exclusion from agricultural capital asset definition for an agricultural land arises, when it is a rural agricultural land, he did not tell like that. Rather, lawmaker defined what is an urban agricultural land, taking that any land, agricultural land, other than situated in an urban agricultural land is declared as a rural agricultural land. Again, I am repeating, lawmaker, rather than defining what is a rural agricultural land, he defined what is an urban agricultural land. If it is not an urban agricultural land, automatically it qualifies as an exemption from capital asset definition, and thereby no capital gains tax on that particular transfer of that part of agricultural land. Okay, let us understand what is urban agricultural land in the words of Parliament through the Bail Act. See here, capital asset means property of any kind, but does not include agricultural land not being a land situated in any area. Land is situated in an area which is comprised within the jurisdiction of a municipality, whether known as municipality or municipal corporation, cantonment zone, name is irrelevant. a municipality or a cantonment board and which has a population of not less than 10,000, or in any area within the distance measured aerially not being more than 2 kilometers from the local limits of any municipality or a cantonment board referred to in item A, and which has population of more than 10,000 but not exceeding 1 lakh, not being more than 6 kilometers from the local limits of any municipality or a cantonment board referred to in item A, and which has a population of more than 1 lakh but not exceeding 10 lakh, not being more than 8 kilometers from the local limits of any municipality or a cantonment board referred to in item A, and which has a population of more than 10 lakh. Read this properly. Basics of income tax law I already discussed completely about agricultural income. At the time I discussed this, but again occasion came na, read one more time such that this will be the final time and the last time for you. Please read the BARAC properly. Done with the reading? Okay. Let us now begin our analysis. First one. What is the difference between A and B? A versus B, what is the difference? See, capital asset means so and so detail they have given, correct? But does not include an agricultural land in India, not being a land situated in any area which is comprised within jurisdiction of municipality or cantonment board. See, what he said, there is a municipal corporation. There is a municipal corporation. In that municipal corporation, within the limits of that municipality, in that you are having there is a area. In that area, you are having a land. Okay, in that you are having a land, and that municipal corporation is there na, that population is not less than 10,000. Sir, I did not understand. That's why I prepared one simple diagram for you to understand it. See here. What is an urban agricultural land? Case A. There is a municipality. That municipality population is more than or equal to 10,000. More than or equal to 10,000. Okay. In that municipality, within that, there is a area. That's why they used here agricultural land, not being a land situated in any area. Okay. That area which is comprised within municipality. That's why my diagram, what I have done. This is a municipality. Within that there is a area. Okay. And population not less than 10,000. Okay. Population not less than 10,000. The municipality population is not less than 10,000, means more than or equal to 10,000. As per the latest census on the first day of the previous year. So any agricultural land situated in any area comprised within the jurisdiction of a municipality having a population of at least 10,000. For that, this is the diagram. If there is a municipality, population not less than 10,000, there is a area, in that area there is a land, this land happens to be agricultural land, then we call it as an urban agricultural land. Transfer of this urban agricultural land will attract capital gains. This is point 1. Let's continue. Sir, then no sir, my land is not within the municipality, my land is away from the municipality. Means within the municipality having 10,000 population, my agricultural land is not there. For example, here is the municipality, here is my agricultural land. It is not within, it is away from. Then it is not a urban agricultural land. Like this, you should not think. Okay, like this you should not think. Why? Our people are very dangerous in India. The municipality, just to escape from the provisions of agricultural land, urban agricultural land and capital gains, they will purchase a land 100 meters away from the municipal limits. Okay, 100 meters away from municipal limits means though it is not a part of municipal corporation, the vibe, the values of this municipality will definitely affect this small piece of land because it is very near to the municipality. I will give you an example. Let us say India. Don't laugh at my diagram. Listen. There is a place. Let's say Hyderabad. Let's say this is Hyderabad city. Hyderabad city, this is the outskirt. Or simply to tell, this is the end of municipal limits. Since it is a part of municipal limit, each square yard cost is 50,000 per square yard. Let's say for example, 1 meter away or 10 meters away, there is agricultural land or there is a land, forget about agricultural, there is a land. This will have 5,000 to 6,000. No, this will also have almost near to that 50,000. 45, 43,000 value will be there also for this. Just 10 meters away. Why? You are not a part of a municipality. You are not a part of any Hyderabad district. Why you are getting value? Because I am very near to them. Therefore, lawmaker thought this way. If I tell you should be within municipality, people will try to cheat the government by buying a land just meters or just 1 kilometer, 1.5 kilometer away from the municipality. Therefore, they brought this provision. What they have done? This one. 1, 2, 3. Okay. See here. There is a municipality. Which kind of municipality? This is a small sized municipality. Population is more than 10,000, but not more than 1 lakh. But not more than 1 lakh. Such kind of municipality. Your land is within a? No. My land is away. Okay. See the diagram. There is a municipality. Okay. There is a area within 2 kilometers distance from the municipality. Within how many kilometers? 2 kilometers distance from the municipality. This municipality is big one, small one, smaller municipality. How much? Only 1 lakh population, max 1 lakh. 1 lakh population municipal corporation is there. 2 kilometers away from that there is a area. In that area there is an agricultural land. What this is? Though this is not within the municipality, since it is within 2 kilometers vicinity, within 2 kilometers radius, it is still, since it is there, this land also I call as urban agricultural land only. Okay, number 1. Second, which kind of municipality you are? My municipality is a medium-sized municipality. Means it is more than 1 lakh, but not more than 10 lakh population in that municipality. Since this is a big, since this is a bigger municipality, I will go back 6 kilometers. In this 6 kilometers, if there is any area, in that area, if there is any agricultural land, I call it as urban agricultural land only, though it is not within the municipal limits. Next. There is a municipality. Okay, which kind? Big sized municipality. Hyderabad is there, Chennai is there, Bangalore is there. Okay, Mumbai is there. Big city. Hyderabad city is 65, 66 kilometer city. Then how to understand? 60, 70 kilometers means it is almost covering up a very good part of the state itself. Are you understanding or not? Big cities are there which are having 60 kilometers, 70 kilometers from one end to another end. Such a big cities will be like a sun. Their radiation will not just reach 2 kilometers. Next 8 kilometers, their impact will be there. Therefore, what lawmaker thought, if there is a area, in that area you are having an agricultural land, that area is within 8 kilometers from a very big municipality. I call this also as urban agricultural land only, though it is not within the municipality, but within 8 kilometers vicinity from the municipality. Okay. And moreover, see here, municipal limits end. My land, population 1 crore. Hyderabad city, if you take 1.5 crore population is there. Okay, sorry, okay, 1 crore, let us take. Like Chennai, Bangalore, these Hyderabad, these all areas having city itself is having somewhere around 1.5. Hyderabad is having 1.8 crore population. One city land. You can imagine now. Same almost with the Bangalore near to that. Chennai also same almost. Some amount less or addition. So plus or minus almost every city is like that. They crossed 1 crore already. But the problem is my agricultural land is this dot. Municipal limit end is this dot. Now what will happen? I will go like this. I will go this way. Like this I will go. Okay. Now it will become 15 kilometers. 15 kilometers. I booked a Rapido. Rapido went like this. 15 kilometers. Then I said, okay, since it is 15 kilometers away, I am not in the limits of municipality. It is not an urban agricultural land. That's why lawmaker is not a fool. What they said, is it one, is it two? Okay. Don't go on Rapido, don't go on Ola, don't see Google Maps. No GPS. They said, shortest aerial distance. Which one? Not aerial distance again. Shortest aerial distance. It's also called as a crow flying distance. If a flight or if a crow goes from one place to another place on a straight line, for example, draw a straight line from here to here. Yes, sir, drawn. Okay, straight line. Shortest, yes, sir, shortest. See, I can go like this also, but this will become longest. When there is a shortest plane distance on a flat surface from one end to another end, you draw a line. This is 8 kilometers, sir. That's it. This will become rural agricultural land. Understood? So you should not see the land distance. You should see the aerial distance. In the aerial distance also, what you need to see? Shortest aerial distance you need to see. That's right. Distance is not the aerial distance, shortest aerial distance. Okay. Not to be measured in terms of approach by road. Up to here, everyone understood? So see this diagram and that diagram also. Understand the contents on the Bare Act. 2 minutes time I will give, analyze it properly. We will be going into the next part of capital asset definition itself. Clear to the point, everyone? Done. Next discussion. So now we completed other part of definition in capital asset. Okay. I'm going back to the Bare Act. So what we completed now? We completed capital asset means any property of any kind. Okay, property of any kind held by the assessee, whether or not connected with the business or profession. Okay. Next we went into does not include. In this, stock in trade completed, personal effects completed, agricultural land also completed. Okay. Now remaining parts are also there. What are not capital assets? 4, 5, 6. These are all government nominated bonds and deposits. Means these things when they transfer or when they come up for maturity, there is no tax under the head capital gains. Okay, even if you transfer them, no problem, nothing will happen, because these are all not issued today. Very, very long back, when government is in the need for money, they raised gold loans from the public. At that time, they raised for government purpose, say 6.5% gold bonds, 1977. 7% gold bonds, 1980. National Defense Gold Bonds, 1980. At that time they issued. In order to encourage more investments into that, government at that time, since it is sensitive in India, 40-50 years back, they announced that even though you transfer, capital gains won't get attracted. Once decision taken forever. Special bearer bonds, 1991. Okay, at the time of economic reforms in India, in 1991, this was taken place. Next, gold deposit bonds, 1999. Gold monetization scheme, 2015. In these areas, government is getting the benefit. In order to encourage more people to involve in this, they said transfer of any of these assets will not be treated as a capital asset, because all these are not capital assets itself. These will be treated or not to be treated or not to be treated. Normally bonds, debentures, shares, everything is a capital asset. But 6.5% government bonds, 1977. 7% gold bonds, 1980. National Defense Gold Bond, 1980. Special bearer bonds, 1991. Gold deposit bonds and under gold deposit scheme, 1999. Or deposit certificates under the gold monetization scheme, 2015. In these cases, there is no involvement of capital gain, because these things are not considered as capital assets. Everyone understood the point clearly? Nothing great beyond this. You need to just remember the names. Next one. Next one. So we have completed section 2, class 14, subclass A, but does not include 1, 2, 3, 4, 5, 6. Everything is completed. Next. So this part we need not read, over. Now we need to read B. This is the old B. I wanted to show you what is the new B point. New B point have subclauses 1 and 2. Okay. In this 1 itself is the previous B. 2 is recently added. 2 is recently added. Okay. Let us understand what this is. Any capital asset means any securities held by foreign institutional investors which has invested in such securities in accordance with regulations made under SEBI. Who invested? Foreign institutional investors. Will invest where? Will invest in companies in India. They will be regarded as capital assets. Sir, why they have to tell about this? Listen carefully to the point. Foreign institutional investors generally will not invest in the company directly. SEBI regulations says that there should be a common fund manager. Through fund manager, they have to invest in India. I am Apple Incorporated. I am Tesla Incorporated. I am a foreign person. I am an institutional investor. I am Bank of America. Okay, I am Wells Fargo Bank. I am an institutional investor located in a foreign country. I am a notified FII, foreign institutional investor. I will not directly invest in the securities of Indian companies. I will invest through a fund manager. I will invest through what manager? Fund manager. Listen carefully to the point. Whenever you are a fund manager, you will take money from so many FIIs. On their behalf, you will invest in Indian companies. And technically, who is the owner? Technically, FII owner. So therefore, what they said, there is a FII invested in securities in accordance with SEBI regulations. SEBI regulations, the fund manager concept is there. So through them, if you invest, that is the capital set only. Sir, why there is a need to tell that? Why there is a need to tell? Listen, they will buy the shares. Who? FIIs. They will buy the shares. They will buy the shares directly through fund managers, through fund manager. Who is a fund manager? It's like a mutual fund person. Mutual fund ki what is the latent duty? Technically, to understand what is everyday work of a mutual fund manager, what is everyday duty? Buy the stocks, sell the stocks. Since FIIs are not directly investing in India, FIIs are investing through fund managers. Since these fund managers ki everyday business is a buying and selling of stocks, therefore this will become a stock in trade for them. Therefore, you might treat this as a business income. Lawmaker want to tell that illa, that is not the way you need to understand. Though fund managers are investing in India, whose money they are investing? FII. For a FII, it is an investment but not a stock in trade. Na? Therefore, there is a clarification coming from the department saying that if a FII invests in the securities of a company located in India as per the regulations of SEBI through a fund manager, don't see the activity done by fund manager, see the activity done by FII. Since for an FII, it is only investment but not a stock in trade, treat it as a capital asset only. That is the concept they wanted to convey. Understood? Because when this amendment came, not this amendment, this amendment is point 2. Point 1 anyway is same even before. Now the question is, why this point came? This point came in Finance Act 2014. Which one? Finance Act 2014. 2014 Finance Act. January 2015 this was passed. 2015. I'm talking long back. December 2014 Finance Act. January 2015 it was approved in the Parliament. At that time, this particular point B came. The first point B. Now it is a point B1. Why? FIIs will invest in India. Not directly, through fund managers. Fund managers invest in India. Owner is FII. But what is the work of a fund manager? Fund manager will daily do the duty of buy, sell. Other duty of a fund manager. FII put money in Indian company through fund manager. For a fund manager, what it is? Daily activity. When you do something as a daily activity, what it will become? Stock in trade for you. Therefore, FII's investment through fund manager, is it a stock in trade or is it a capital asset? Question came to the department. Therefore, 2014 Parliament our then finance minister has clarified very clearly saying that this is not classified as a stock in trade. This is classified as a capital asset to put end to all kinds of confusions, because FIIs when they are investing in India, they are now having a doubt whether this will become our business asset or whether this will become our capital asset, whether this is a stock in trade, whether this is an investment for us, whether this will attract PGBP, whether this will attract capital gain. If it attract PGBP, tax audits, all these things will get attracted to them. Nonsense, just for the reason that FIIs have put some investment in the Indian company securities, if you ask them to get their account tax audited, then who will be having encouragement in India? Therefore, what they said, first to do one thing. India want growth. Growth comes from investment from foreign country. We are ready to put, but first tell me under which head of income you are going to treat income from this investment. If I transfer that, then government made amendments to Finance Act 2014 long back. Okay, Finance Act 2014 they went and they started reading entire Finance Act and they understood that this is a problem. What is the problem? FIIs want categorization, means characterization. What character this is? Business income or this is a capital gain income? If I transfer these securities, tell me first what kind of investment this is. Then government found that there is a pressing need to decide about the character first. Therefore, they said Fund managers are there na. These fund managers are not having any PE in India. They are not having any permanent establishment in India. Therefore, they are not residents. So therefore, what they said? They said that you are looking into the fund manager activity of buying and selling and telling that it's a stock in trade, but don't see them. Whose money is coming into India? FII. For them, it is an investment. Na? Therefore, treat it as a capital asset. That's how this definition came. Okay. Recent 2025 Finance Act amendment came on this. They added another one also into this. Same, non-resident again, in an investment fund. An investment fund. See, same concept again. Investment fund companies are there outside India. They are putting money in the securities within India. Under 115 UB, explanation number 1, class A. Oh, explanation 1, clause A, 115 UB. In that section, what they said, same. FIIs are there, here not there. From the public, these investment funds will take money, and these investment funds are investing in India. For investment fund, it might be a stock in trade because their duty is to buy and sell the stock. But for the public outside India, this is not a stock in trade, that is a capital asset. Therefore, they said, see what the nature of asset is for the origin, not for the investment fund or for the fund managers. Same logic. Investment fund which has invested such securities in accordance with the SEBI guidelines are under IFSC Authority Act. In these two cases, remember, this is a latest amendment. Again, I am repeating. There is a foreign investment company, foreign mutual fund company. It takes money from public, invested money in securities in India. For investment fund, buying and selling is a natural daily ordinary business. For them, shares will be, securities will be stock in trade. Therefore, if you see this person as the main source, this will be treated as a stock in trade only. Correct? Then, for all the investors who invested in that investment fund, there will be a PGBP income in India. There is a business income in India. Therefore, what they thought, let us not understand that way. Let us understand in a way that though for investment fund it is a daily activity which is treated as stock in trade, but very clearly if you go inside that, investment is made by the investors. Na? For those investors it is investment. Therefore treat it as a capital asset only, but not as a business asset or as a stock in trade. Therefore amendment also added to that now. Now your doubt will come, sir. What is the guarantee that the explanation now you have given is a right explanation? Really the concern of the government is 2014 this amendment came. How do you know all these things? That's the question. Research. Point number 1. Proof of my research. You can see here. I kept full proof also. I know that you will ask the same question. Characterization of income in case of FII, Finance Act, Clause 4 of Finance Act 2014. See there. Number also I have given. Clause 4 for clause 4.1 4.2. Our finance minister in the parliamentary speech announced this. Sir, from where you got this? You might type this. That chance also there. Then also you don't believe Koushik Mukhesh. Then see again. You can see here. This also you don't believe. Circular number also I have given. See there. F number 142/13-2014. Okay, circular number 1-2015. Finance Act 2014. See there. Why FII's problem came, they are explaining in the Finance Act itself. That only I copied pasted here. Without research, Koushik Mukhesh won't speak anything. Okay? And I know that you also believe with me, or else why? Just on announcement, so many people have taken the classes for final DT and inter DT. Unless and until you have a belief on me, why you will take? On that, I don't have any doubt. But again and again, I wanted to reinforce that. If I touch a concept, I will go into its depth. And I will analyze as much as possible on that, and then only I will be explaining you. Okay, if you want, this is a book only on capital gains. Doubt? See, FAQs on tax planning relating to capital gains. I am reading this entire book now for your understanding. If it's green in color, you can't see. FAQs on tax planning related to capital gains. This book itself, 3000 pages. This is only on capital gains. In that circular I am reading now, you can see. I think light is very much brighter. You can't see. Now you can see. Circular. That circular, after reading, I went into the circular number and I started reviewing the research. Why these amendments are coming? Okay. So, capital gains chapter is very close to my heart because Indian government is getting substantial revenue through capital gains. Understood? So, we need to know about it. When government is getting so much revenue, it will be concentrating more on capital gains. So, sorry, anyway, let us read the logic of the parliament. Why they brought this particular FIIs? See, very simple, yeah. Koushik Mukhesh invested in securities of TCS. What it is? Capital asset. Because my ordinary course of business is not buying and selling shares. Na? I am not a trader. FII is not a trader. Foreign institutional investor. You are only telling that he is an investor. He is not a trader. But the problem does not come there. Problem came because FIIs are not investing in India directly, but through the fund managers they are investing. For a fund manager, it is a stock in trade. Therefore, doubt came to the department. What to do with this? See here. But to encourage more FIIs to come to India, hey, if I treat it as a business income, na torture, yeah. Every year they have to file their return of income in India, even though they don't do any transfer. For example, if I am FII, invested in particular shares of a company, what will happen maximum? Dividend will come, now other sources, it will become taxable. That's it. Business income, now you have to prepare books of accounts. All this nonsense will start. See there, that's why. The provisions containing clause 14 of section 2, okay, means capital asset definition of the Income Tax Act. Before the amendment, the term capital asset include blah 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 blah, everything they said. The foreign portfolio investors notified as FII for the purposes of Income Tax Act faced a difficulty in characterization of their income arising from the transactions in securities as to whether it is a capital gain or a business income. So FII has got a doubt whether my income on transfer of that particular thing is a stock in trade being a business income or a capital asset being a capital gain. Further, fund manager managing the funds of such investor means what? That investor is not directly investing na? Through fund managers they are putting their money in India. Remained outside India under the apprehension that their presence in India may constitute a permanent establishment. And the income arising from the transactions and securities held in India may be taxed as business income of the PE. In this context, the finance minister in his budget speech stated as under, foreign portfolio investors have invested more than rupees 8 lakh crores in India. As the problem, they will go back if you do any harassment in tax scheme. So 8 lakh crores, 130 billion US dollars in India. One of their concerns is uncertainty in taxation on account of characterization of their income. Moreover, the fund managers of these foreign investors remain outside India under apprehension that their presence in India may lead to adverse tax consequences. With a view to put to an end to this uncertainty and to encourage these fund managers to shift to India. So please, fund managers, shift to India. We are not going to treat you as a permanent establishment and we are not going to treat it as a stock in trade. We are not going to harass you under PGBP head. If you sell after 10 years, then only pay capital gain tax. Therefore, Government of India, in order to encourage FIIs to come to India, brought this amendment. Read. Read properly. Okay, I think you spend enough time for you to read. So let us continue. Next, capital asset means A completed, B completed, B la 1, 2 also completed, amendment also completed. Before amendment, FIIs, investment in Indian securities under the SEBI guidelines is a capital asset, not a stock in trade. Don't see the mediator sitting in the middle, see the original person. Same logic now applicable also for the investment funds making investment into India. They are not directly making through the money taken from the public there they are taking. Therefore, don't see the nature of the fund manager or investment fund, see the origin there. For them it is an investment, treat it as a capital asset. Okay, next, C point also underwent an amendment, but on this there is a separate discussion for us in another chapter. Therefore, I will just explain the idea behind this amendment. Logic and problems we will solve in another chapter. Any unit linked insurance policy, okay, any unit linked insurance policy to which exemption under section 1010D does not apply. Okay, these words are there now on account of applicability of 4th and 5th provisos. That is now deleted. It's not there now after amendment. So for the May 26 students, what you have to remember, any ULIP, unit linked insurance policy for which 1010D does not apply, those will be capital assets. If 1010D is applicable, it will not become a capital asset. It will not become a capital asset. But what it will be, everything, other sources when we are discussing, we will discuss in detail about 1010D. This amendment will again come there. So I'm just explaining the idea behind. It should be ULIP. For that 1010D, allowance is not given, the exemption is not given. In such case, that kind of ULIP amount will be treated as a capital asset. Okay. So now we completed section 2 class 14, subclass A, subclass B before amendment. Before amendment only one point, this point used to be there. After amendment 1 and 2 are there. Okay, C point completed, but does not include 1, 2, 3, 4, 5, 6. Everything is completed. Final touch. A meaning of foreign institution investors, I told them. Same meaning as assigned in 115D. Securities means securities as defined under SCRA Act, Securities Contract Regulation. This is also okay. Explanation 1. Let's read this. For the removal of doubts, it is hereby clarified that property includes and shall be deemed to have always included in any rights in or in relation to an Indian company, including rights of management or control or any other rights whatsoever. Read that point clearly. Read that point clearly. Okay, read the point. Listen. Let me explain the meaning of this statement. See here. Whenever you read the definition of capital asset means property of any kind. Property of any kind. When I use the word property, the term property is not just some mobile, immobile property there. The term property includes rights on something, is also called as a property. If you transfer your rights to some other person, that also will result in capital asset transfer. Capital gains will get attracted. So lawmaker intention is very simple. Listen carefully. See here. I have a land. What land will give me? Land gives me revenue. Land gives me income. Okay, if I give it on rent or something like that, it gives me rent. If I transfer that land, I will generate an income. Okay, instead of doing that, what I will do is, I will not buy the land. I will buy rights on the land. Means what? I have whatever I wanted to do on that land. Okay. Instead, if I buy the land, if I sell the land, if I buy and sell the land, capital gain is getting attracted. Therefore, what people started doing in the world, or especially in India, they are not buying the land, they are buying the right to use that land. After that, they are selling that right to use. And technically, what they are transferring, land is meant to use. So they are not transferring the land. Land documentally there is no transfer, but the rights on land is getting transferred. Lawmaker observed this and they brought any kind of right is also treated as a asset only. Asset is an asset, but anything which gives right on an asset is also an asset. That's how rights shares time we will give offer letter. Which offer letter? Rights offer letter. Section number 62, subsection number 1, class A, subclass number 1, Income Tax, Companies Act, Companies Act. Section 62, subsection 1, class A, subclass 1, talks about rights entitlement. What entitlement? Rights entitlement. Company, whenever it is going for a rights offer, it will not directly go for rights offer. It will give a rights offer letter to the existing members. That rights offer letter can be renounced to some other person at a price. Now, what you are transferring? You are transferring shares, are right to buy the shares. Right to buy the shares. What is that right? Right is an asset, because it is giving you a right to buy another asset. This asset gives right to buy another asset. Therefore, this is also an asset. Therefore, what lawmaker thought? If I target on assets, various things which are really rights on that assets are missing. Are you understand the point? So what people started doing, for example, I am having tenancy rights, I am having license rights, I am having subtenancy rights. What do you mean subtenancy rights? See here, you gave me a property on rent. I have a right to transfer it to some other person also on rent. If I give it to rent, I will generate regular income. I am transferring that right to another person for 5 lakh rupee. I am not transferring the building. I am not transferring any property. I am transferring my right. I am transferring my right. Okay. So now what will happen? Lawmaker thought that though it is not an asset in itself, but it is looking like that of an asset which is generating its capital revenue or not. Therefore, try to understand capital gains chapter. The term property is so wide, so big that property of any kind, that property can also be in the form of rights. Also in the form of rights. Okay. So in that right not only includes the tenancy rights, subtenancy rights, lease rights, etc. In that, holding company having a right to control subsidiary company. If that holding company is transferring its right to control the management to another company, that also will become a transfer. That's what he wanted to tell here. For the removal of doubts, it is hereby clarified that property includes, not means, property includes rights. In that, which right is also there? Any rights in relation to an Indian company, including rights to manage, right of management and rights of control, or any other rights whatsoever. Holding company, subsidiary companies, they wanted to cover a subsidiary company, a holding company, or a company and associate company. What will be there? You have a right to control, right to either to have a control over the shareholding or the management. That right, if you transfer to another person, they will get that rights. Therefore, transfer of the rights by one company to another company will also be treated as capital asset only. I think you understood the entire concept now. So that's the wider scope of the term capital asset. That's why they use the word capital asset means a property. They did not use asset. Property. Property means what? This is mine. What can you tell this is mine? On that, I have a right to receive rent. You are having a property on that. That's it. That will become a capital asset. Means the term asset here is not asset as per accountancy. Asset as per Income Tax Act. They created a fiction saying that any property either movable, immovable, tangible, intangible, fixed, circulating, any rights on any asset, including holding company. One company rights on another company to have a right of control or right of management is also treated as a capital asset only. With this 100% we completed capital asset definition. But sit back, relax and listen to other additional discussions. I have written a lot of notes on this for you to make expert in this area. So FII concept with effect from 1/4/2026. FII's investment in securities notified by SEBI, capital asset. Investment fund investing in the securities notified under SEBI or IFSCA means what? International Financial Service Centers Authority Act. Under this, if you invest, it will be treated as a capital asset only. Next. Parliamentary comment I have given. So what is the crux of the parliamentary comment? Write down, everyone. Write down. Don't sit idle. Okay. See what happens. See here. There is a see there is a foreign institutional investors. Fund manager. Indian company. Indian company. Okay. Now what happened? Foreign institutional investors invested in foreign currency. Converted and invested in Indian company. For a fund manager, buying and selling of securities is an ordinary course of business. Is an investment. Now, question is, security should be treated as stock and trade. From the investor point of view, FII. Okay. Government said, go by this, not this. Okay. Okay. This is the subject matter of discussion. So the summary diagram. Next, capital asset does not include. Already we completed all these. Agricultural land discussion also completed. Notes. I have written some additional notes for all the students' convenience sake. To attract the charge of tax under the head capital gains, the property should be a capital asset on the date of transfer. Need not be capital asset on the date of, very, very important here. Listen carefully. A doubt came like this. Transfer of capital asset, you are saying. It should be capital asset on the date of transfer, or from the date of acquisition only it should be a capital asset. Lawmaker said that, and case laws also said a conclusion that it should be capital asset on the date of transfer. It need not be the capital asset on the date of acquisition. Next, explanation one. Just now we read that property not only includes mobile, immobile, it also includes any rights. Okay, so mainly inserted mainly to cover holding and subsidiary influence. Analysis on insignificance of acquisition of capital asset. Assessee has agricultural income. Very, very important. See here, an analysis on insignificance of acquisition of capital asset. Sir, what is this, sir? See, doubts won't come unless I ask you, because you won't think beyond a particular level. Now you will prepare for exams. But I wanted to ask you beyond that. If a tough paper comes also, you should be able to write. My question is, I purchased a capital asset out of agricultural income which is exempt from tax. Will you treat that as a capital asset now? See, there is an assessee having agricultural income which is exempt. He made acquisition of a land, still regarded as capital asset only. Nature of asset doesn't change based on how it is acquired. Very, very important concept. Asset versus capital asset. Listen carefully here. See, I made in-depth analysis on every line and line, word to word in this particular area. I have a question for you. Okay, I have a question for you. See, I will show you the question also. Okay, see here. What they said in the charging section. Any profits or gains arising from transfer of capital asset shall be deemed to be the income of the previous year in which the transfer took place. Okay. From this, what we have to understand? From this, we have to understand that there should be a capital asset. There should be a transfer. Then it shall be deemed to be the income of the previous year in which the transfer took place. Under the head capital gains. Clarity is there. Okay. Clarity is there. Now the question is very clear. Capital gains section will get attracted only if there is a transfer of what? Capital asset, not an asset. See, motorbike asset. Okay, motorbike asset. Laptop asset. Okay. Next, so many things are there now. Wearing apparel asset, but they are not coming into the definition of capital asset. Rural agricultural land is an asset, but it is not a capital asset. Okay, 6.5% gold deposit bonds, asset, but not a capital asset. Why I am telling all these things? These are all assets, but not capital asset. So what transfer attract section? Transfer of capital asset will attract the section. Understood the point or not? So if you observe, section number 45, one only we read, na? 45, 1A if you read, capital asset. They clearly written here, capital asset. Wherever you see the word is capital asset. Now question will arise. Sir, what if it is an asset but not a capital asset? Will that enter into this section? Enter into this chapter? If something is not a capital asset but only normal asset, will it enter into the chapter capital gains becoming a capital asset? Yes, it will enter. I observed that also. On that we are having separate complete discussion, in-depth discussion. You have to wait for next video to understand that section 46. See here. Genuinely, everyone who are listening to this video fully, put a comment below. If you are listening on this YouTube or if you are listening to this over the app, then you can put me a personal message directly. Did you really notice this? If you have already completed income tax, see, normally capital gains chapter gets attracted only if there is a transfer of capital asset. Transfer of a capital asset. But even without a transfer of capital asset, it can get attracted. Do you know that? Yes. Whenever specific provision is deviating from the basic charging section, that specific section only we should be giving more importance, not the charging one, is what we are going to prove section 46. Capital gains on distribution of assets, not distribution of capital assets. At that time, even agricultural land transfer also will attract capital gains. That's why, notwithstanding anything contained in section 45, the beauty started. Forget about 45. Read this section independently. Where assets of the company are distributed, not the capital assets. Understood the point or not? That's why if a shareholder receives money or other assets in the capital asset, maybe there, may not be there, he shall be chargeable under income tax under the head capital gains. Why they are telling so clearly? Because normally transfer of assets don't attract the section. Transfer of capital assets only will attract. But lawmaker wanted to provide one exception for that. Section 46 was brought into place. When we come to 46, we are going to do post-mortem of section 46 and try to understand it in a truest sense. Okay? That's what I have written. So what are the new things that you learned? In order to attract capital gain tax or capital asset definition, it should be a capital asset on the date of transfer, need not be a capital asset on the date of acquisition. Next, with what source of income you bought capital asset is irrelevant. Asset versus capital asset. See here. Capital asset, it is a specific term defined for taxation purposes with some exclusions. Agriculture, rural agriculture, land, etc. The term asset is broader and more comprehensive than capital asset. It includes also the exclusions of capital asset. Agricultural land is excluded from capital asset, but is an asset. In section 46, law uses the word assets rather than capital assets, and thereby exclusions of capital assets are thereby included. Very, very important. Next point. See, you will not even assume that these are the areas which we are going to touch. Like the minute details we are going to take up. See here once. See here. Capital asset means property of any kind held by the assessee. It's a held, not owned. Held. Normally, generally, the term held represents owning. But if that be the case, he will clearly tell na. Section number 22, house property chapter, they clearly said owned by the assessee. If really here that is the meaning, they will tell owned. That's why what I said clearly to you, tenancy rights are there. I don't have land with me. I have a rights on the land. I have rights on the land. I don't have land with me. I have a rights on the land. Now what you have to understand, now I am not the owner of that asset, but still I am having a rights on that asset. Na? To encourage that, lawmaker did not use the word owned, rather they use the word held. They use the word held. Now, how to understand this word held? When you will tell that a person has held an asset, read the section clearly. What is the date? Okay, done. See, on this I have done enough analysis. Follow that. Illegally encroached property do not come under the definition of capital asset. I have a property. I illegally captured that. Encroachment, I brought that land. I can't pay capital gain tax on that because it will not come under the word held. It's not held by me. It's illegally encroached by me. Case law. Next. Section 28, 3 point says that non-compete fees is taxable under the head PGBP. Okay. It's as a business income, it will become taxable. Did you ever question why? Normally, PG people, what should get taxed? Revenue income should get taxed. Sales, revenue item. Purchases, revenue expense. Both will come in PGBP, P&L account. Something which do not come under the P&L account is also charged to P&L or is taken to the income of a P&L under the head PGBP. Actually, non-compete fees is what? Non-compete fees is a one-time income. See, I wanted to, let us say for example, I wanted to start a CA firm. I wanted to start a CA firm in Hyderabad, in Jubilee Hills. You are already an established CA firm in Hyderabad, having a very good clientele. I am having a very good name in the place, as in the chartered accountants community and in the clientele community. I am having a very good name that he will do very much good. Okay. Now you are also having equal, but now I am becoming a threat to you. I started my office just opposite to your office. You came to me and said, please don't start your firm here. It will distract my clients. Okay. Please leave. I said, why I should go? You said, no, you need not go like that. Let's go into a gentleman agreement. I will give you 5 crore rupee. Okay. You said to me, I will give you 5 crore rupee. Leave Hyderabad and go. In Hyderabad, you should not start any firm in this name with you as a partner for the next 5 years. Chalo. Yearly 1 crore, 5 crores I will pay, leave Hyderabad city. I went. Are you understanding up to here? From this, what you understand? This is a receipt which I receive, okay, Not every day it is received once in 5 years time. Normally, if it is a capital receipt or a revenue receipt, capital receipt. Since it is a capital receipt, it will not come generally into that income definition part, because income means what? It should come on a recurring basis. Then only I will call it as an income. Understood or not? Hey, for example, I will get income in two ways. Number one, my office. Okay, my office, my clientele audits. Second one, classes. Okay, I will also get income if I write any script for any short films. Okay, but I will do that once in every 1.5 2 years time, or 1 year once. What is your source of income means you will not tell my source of income is writing script. Maybe for SS Rajmold it is a recurring income, but not for me. And second thing, I sold one of my property, on that I got revenue. What is your income? Is selling property? Yeah? No, because when I say the word income, income always have a nature of recurring in nature, but this is non-recurring in nature. Non-compete fees is recurring or non-recurring? Non-recurring. How you are charging it to PGBP head? Question will arise. Question will arise or not? There are 5 heads: salary, house property, PGBP, capital gain, other sources. Which one? Other sources. Now question will arise. It cannot be a salary, because it's not a salary, it's a non-compete fee. Salary means paid by employer to an employee to do something or for already done, either due or receipt basis. This is not employer-employee relation, and there is no work done or to be done. It is not to do a work I am paying. It's not a salary. Obviously not a house property. Now 3 heads are there. Okay, 3 heads are there. When it should come to other sources, if something could not be chargeable under any of the previous heads, that comes to other sources. So 2 things are left for us: PGBP, capital gain. PGBP, capital gain. Okay. Now I am asking all the students listening to my class now. If you have already completed income tax previously, answer this. If you could not answer, I will answer. After answering, it's your prime responsibility to put a comment below or put a message to me that you are learning. Then I will understand the process in which we are going. We are 100% right in understanding the contents in a right way. We are not just reading nonsense summaries. Okay, so please ensure that you are fully understanding the concept. Tell me, non-compete fee can't be a salary. Non-compete fee can't be house property income. It should come under either PGBP or other source, capital gain or other sources. Other sources you keep aside. Why? Other sources, like, it will come only if it is not coming under PGBP, not coming under capital gain. So let us first check whether it can come under capital gain or PGBP. First, since it is one-time receipt, it is a capital receipt. It is a capital receipt. Okay. Next. Now, whenever it is a capital receipt, for all capital receipts having any gain or profit element in that, you will always have one separate head called as capital gains. Okay. Capital gains head is there. So now the question is, therefore it should be taxed under the head capital gain. Ideally speaking, that's a right thing. But it is not chargeable under the head capital gain for one good reason. That reason also I have written in my notes. Do you know what is the reason? Guess what is the reason? Why this cannot be charged under the head capital gain? Because capital gain is a difference between sale consideration or full value of consideration minus cost of acquisition. Cost of acquisition. Now, sale consideration, I can tell 5 crore. I am selling my rights not to start business in Hyderabad. Minus, we did not acquire anything. Cost of acquisition you put. As acquisition is not there. Capital gains chapter will get attracted only when something is acquired at the beginning, which is transferred at a later stage. Are you understanding or not? Okay, see, I have tenancy rights. I'm selling those tenancy rights. I'm having lease rights. I'm selling those lease rights. I am having rights on natural resources. I am selling those rights. Acquisition, transfer, acquisition, transfer, acquisition, transfer. That's why the word used is transfer of acquired assets. That means acquisition should be there. Bonus shares are transferred. So then why, sir? Bonus share transfer coming under capital gain. Don't talk like a fool. Capital gains lo bonus shares will come. Reason, there is an acquisition. That cost of acquisition is zero, but acquisition is there. In case of non-compete fee, what you acquired, so you did not acquire anything. Therefore, salaries it cannot be, house property it cannot be, capital gains also it cannot be, because acquisition is not there. Capital cost of acquisition concept does not arise. Therefore, it can't come under capital gain head. Under what two heads it can come now? Either PGBP or other sources. Either PGBP or other sources. Any kind of non-compete fee received by an individual or any person in relation to his business comes under PGBP. Any other non-compete fee, put it under other sources. Put it under other sources. You understanding? Okay. No, sir. I heard that non-compete fee always comes under PGBP head. Suddenly you are telling it will come under other sources. Where, sir? Show me, sir. Point number 1. This is Koushik Mukhesh. Unless and until I 100% feel confident about something, I will not tell. Second point, I will show you the Bare Act. See here. Section 28 PGBP, charging section. 28 5A. Any sum whether received or receivable in cash or in kind under an agreement for not carrying out any activity in relation to any business or profession, that comes under PGBP head. Any general kind of non-compete fee if you receive, or anything you receive for not doing something, see, for example, I will give you a scenario of situations which can get attracted. I have a decree with me. Decree means I have a right to sue you on a right of tort. There is an act called as Law of Torts. T-O-R-T. Tort means hurt. Any hurt caused by one person to another person attracted under Law of Torts. LLBO we used to study. Very popular there, but CL there is no concept of Law of Torts. So I am not going to discuss anything regarding that. So whenever there is an act of a tort, then automatically I will get a right on another person to sue. Car accident happened here. Person who committed accident will pay compensation to the person to whom the hurt is caused. Okay, now I have a right to claim compensation from you. Okay, right to claim compensation, or I have a right to sue you and put you in jail. Now you said that please don't do that. I will go into jail. Compensating, I will pay you 1 crore rupee, you said. Now also you paid me 1 crore. This compensation is a sum received for not carrying out any activity, but not in relation to business or profession. This compensation will come under other sources. That's the difference. Understand the Bare Act properly. Means this is the meaning. Let's not close your eyes and read the Bare Act. Loose and slow, you will understand the provisions. Tightly, you read each and every concept. Lifelong you need not come back and read. How I am remembering, like that you also will remember. What is the great task in that? So therefore, now question. Sir, it's not salary. It's not house property. Justified. It's not capital gain. Perfectly justified. It's not even other sources. That is also justified. PGBP it is taxable. Yes, because it is in relation to business or profession. Sir, even then, it's a capital receipt, na sir. It's not a regular receipt for him to charge it to PGBP. Listen, Koushik Mukhesh will start a firm opposite to firm 2. What if non-compete agreement is not entered? What firm 1 would have done? It would have done its operation for 5 years. First year it will get some income. Second year I1, I2, I3, I4, I5. What is this? These are all incomes this firm would have generated if non-compete agreement has not been entered. Okay. For not generating this income, I am giving you non-compete fee. Means this is a income which is capital nature, compensating all revenue incomes that you might have got. So instead of seeing this as a capital receipt, see it as a combination of revenue receipts. That's why charge it to P&L account and treat it as an income under PGBP. That's how the lawmaker wanted to treat this non-compete fees. This is the concept here, everyone. Okay. So why I am telling this is, see here. Non-compete fee, though capital receipt, is not taxable under the head capital gain since element of cost of acquisition is missing. To put it very clear, acquisition do not exist. Next, held versus legal ownership. Held versus legal ownership. What is this held versus legal ownership? Section uses the word held. Okay. That means it's not just owned. Possession and control over the property beyond legal ownership. Beyond legal ownership. I have one case law. Stewards versus Lloyd India Limited 2016 Kolkata Tribunal has given a judgment. What they gave? State government handed over management of industrial estate in 2006 itself. There is an entity. To them, they handed over management to control everything. Right given to in our language. Right to management was given. But registered in 2015, it is held that assessee held the property since 2006 because rights were given to, though registration ownership is not transferred. That's the meaning of the term held. If really lawmaker intention is to only to tell that ownership, he will write clearly owner like what he has written in house property chapter. With this, we completed entire capital asset discussion with all surrounding aspects inside that. Okay. Hopefully you are all comfortable in the definition of capital asset with the full Bayer Act analysis. So now we completed charging section, meaning of capital asset, negative list. Now we are going to read types of capital asset. Next targets, next video, types of capital asset, period of holding, data definition of transfer, transactions not regarded as transfer, and transfer when it is effective. Up to here I will complete in the next one. Then we will come to scheme of computation, full value consideration, section 50C, all those related concepts I will start. Okay. Definitely we'll see a different angle of capital gains. For that I am the guarantor. Okay. Thank you very much. Meet you again in the next video.